Hello, hello, hello. My name is Ernest Mitchell,
And I'm Lauren Mitchell.
and today we're going to talk about the state of health insurance in the U.S. for 2018 and beyond. What are my options? Well, the five topics that we're going to be talking about today are the Affordable Care Act, Obamacare, short-term major medical, fixed benefit indemnity plan, health share plan, and lastly, group health plan. One of the reasons that we decided to put this together was that we were constantly getting questions from our clients that were frustrated with the situation or the options that were available to them and were concerned about the state of health insurance as we know it.
We are going to get started today with the Affordable Care Act. Many of you know it as Obamacare, and you've also probably heard it referred to as the Marketplace. Now, these are great plans for people who have pre-existing conditions. In fact, we strongly recommend that you go with an Affordable Care Act plan if you do have a pre-existing condition or a serious health issue. These plans are great for people who are self-employed or who work part-time or who aren't otherwise offered group coverage through an employer. And depending on your family size and your household income, you may also qualify for a subsidy. That subsidy is going to greatly reduce the cost of your monthly premium. Now, one drawback is that these plans are HMO plans. That means that they are on a limited network. So you definitely want to check with your doctor first to make sure your doctor is in the network before you decide to sign up for an Affordable Care Act plan. And if the cost of a plan exceeds more than 8% of your monthly household income, you may actually be exempt from the Affordable Care Act mandates. And we'd love to talk with you more about that and give you more information. So please give us a call and I'll give you more details. And Ernest is going to discuss option number 2 with us.
Okay. Short-term major medical. These plans are generally written anywhere from 1 month to 12 months. And they have really been taking off since the introduction of the Affordable Care Act. They're designed to push you to the Affordable Care Act plan, which will cover you regardless of your pre-existing conditions. The cost is often a fraction of the price of an ACA plan. And with these plans, you can add vision, dental, life, accident, critical illness, and you can add those separately onto your plan in a way that suits your needs. One thing I like about the short-term major medical is they're straightforward plans. A lot of times you'll have a $2,500, $5,000 deductible, and then they'll cover up to $500,000 or $1 million, whatever you chose based on the price and the product that you wanted for your family. Now, very similar to the short-term major medical is the fixed benefit or indemnity plan. And these plans offer pretty much the same protection as you get with the short-term major medical at a little bit less of the price. These plans, some people call these plans cafeteria style plans. They do allow the consumer to build the plan within the coverage that fits their needs. You can add the vision, the dental, the disability, the life insurance, and all those. They can be beneficial, but you really have to know what you're purchasing. These plans allow the client the ability to build the coverage that fits their needs within their price point. Now, with these plans, along with the short-term major medical, we can still add vision, dental, and disability. And one of the things that people don't understand about these programs is they have something called a schedule of benefits. So, for instance, there could be something in your plan, in an indemnity plan or a fixed plan that said you're covered up to $10,000 or $12,000 for a surgery. Well, you need to understand that because insurance is all about taking a risk. So I don't have a problem with this risk if the plan has a maximum out of pocket. Now, another scenario, before I pass the microphone to Lauren, is if you are purchasing a fixed indemnity plan, because we do have clients that are frustrated to heck with the health insurance market, and they just want coverage for accidents for their kids and maybe some dental for the family. This is the plan that we're going to look at. And that way they can keep their premium at under $200 for the whole family. They get the coverage that they need day-to-day stuff. And I have a lot of clients that are doing that more, and they're just self-insuring and taking the risk, and they're okay with that. So if that is you, then you're probably interested in a fixed indemnity plan. And once again, if you have any questions about this, our job is to send you scenarios, side-by-side comparisons, so that you can evaluate what's going to be the best for your family.
All right, now we have health share plans. Now, health sharing plans may be an unfamiliar concept to many, but they are not a new plan. They've been around for a while, in fact. Health sharing plans are a way for members to pool their premiums together and share the cost of each other's health cost. So, like I said, these companies are not new. And over the past few years, the members have been growing as people seek out new options outside of the Affordable Care Act. These plans are often faith-based plans, so they do qualify for an exemption from ACA penalties. And there are no set open enrollment dates. You can enroll at any time during the year. There's not a set 45-day enrollment period. And that's really great because you can enroll if something changes in your family, you don't like the plan you're in, you can enroll in the middle of June, you can enroll in February, it doesn't matter. It's a rolling admission. And the way these work is you select a monthly contribution amount that's going to work for your family, that works as your premium, and then you also select an annual household contribution that is your deductible. And often with these plans, you can qualify for a reduction in your monthly premium if everyone in the family is healthy. So this is a different type of plan, and it is something that I encourage people to look at because it can be a lot cheaper than Affordable Care Act plans or other options that are out there, but it still gives you that coverage that you're looking for. And often these plans operate on major network. So if you have any questions, I know this is a different concept, please reach out to us and I'll talk to you more about it. All right, and Ernest is going to finish it up with our last option for you guys today.
Okay, the last topic for the day is going to be group health plans. And we are seeing more and more of our clients who are self-employed start to seriously consider this option to where maybe they would have pushed it off a little bit further down the road. Now, there's amazing tax benefits for your business. And then just to touch on this, the reason that there's tax benefits for your business is because we can set up your plan in what's called a Section 125 plan. And that enables your employees to be able to pay for their health insurance and supplementary benefits pre-tax, as well as you reducing their tax liability, as well as reducing the overall tax liability of the business. It's better employee retention. I've seen it time and time again. Employees, when we're calling clients or that we've been dealing with over the years, and they now are opting into their employer plan, they seem pretty proud about it. They a lot of times they'll brag about how good their plan is. Like, oh, I don't need you guys this year. We're good to go. Now, one of the things to keep in mind is that you are required to pay a minimum of 50% for your employees. If you are a group between 1 and 50, you can pay more. You can pay 100%. You can pay 75%, but you're required to pay a minimum of 50% just for the employee.